All right. Happy Hump Day. Good morning. Welcome to the stream. My name is Jacob Gabbard with Invest with Jacob. Today we're going to be live streaming our trades and more importantly, highlighting our indicator that we use all the time that has absolutely been killing the market over the last 19 months. We are up about $72,000 on a $100,000 account. All of these trades are chronicled. Um, and really, it's not some magic thing. It's just having an edge on the market and applying that edge over and over, or as I like to say, relentlessly. Once you um, find a system that works, and for me is one I developed myself, which is the indicator, you just consistently use that and follow the rules, and you will find yourself making money over time in the market, and that's really what it's all about. Now notice I said making money over time. This is not a get-rich-quick scheme. This is not some kind of scam. This is not some sort of, hey, look at this shiny object, it's really going to work, and then see you later. It is a well-thought-out program that has wins and losses. It has very specific rules to follow, and they're easy, simple rules. Very, very simple rules that really take all of the complications and guesswork out of trading. You know, it can be very hard to look at 3 different charts and have to look at the SPY chart, the NQ chart, the ES chart, the RTY chart, all these different things. You can only comprehend so much data at one single point, and when you're day trading, you need to know the entry immediately. And so it's really important to have something that, or have a system that allows you to see the trade very quickly. And what we did is we compiled an indicator called Invest with Jacob Pivot Point Pro, or IWJ Pivot Point Pro. You can see on my chart right here. If I hit the eyeball, those buys and sells go away. And we'll look at how it did, say, yesterday and before here, and we'll look at the results over the time here in just a second, but I just want to kind of go through how it's set up. So on the screen, what you're seeing is in blue here, this is post-market trading. So if I go to yesterday, you can see in yellow is pre-market trading, blue is post-market trading, and then at midnight or so it turns into pre-market trading again. So we need those turned on so that we capture the overnight action that tells the indicator how to react and what happened in the overnight, and that's important for the data flow for the algorithm. So we do have to have our pre and post market turned on, but we don't trade any of this stuff. So anything in yellow and blue is not tradable. Additionally, we don't trade past 10 a.m. Pacific or 1 p.m. Eastern Standard Time, because once you get to that point, that's about the halfway point of the day. A lot of the big traders are out to lunch, volume dries up, the second half of the day becomes very choppy. You can see here there wasn't a lot of movement in the second half of the day, and it becomes really difficult. So what happens is this indicator compiles volume, options, data at key levels, all the different things, all the different places that would be important to trade off of, and then it looks for setups off of that, and it gets us in really close to tops and bottoms. You can see yesterday right at the open, we got a sell. The sell turned on right at the top of this move, so right around 639 or so. We rode this whole thing straight down. It was an awesome winning trade right at the beginning of the day. And then right at the bottom, they flipped. They give us one green bar. We're in on the buy, and the buy skyrocketed as well. So this sell came in late in the day. It was the only loser we had, and yesterday overall great winning day for us on the indicator. So this, this move 639 down to 637, 636.86. It's over a 2-point move straight down, and then they moved it. You can see they moved it straight up, back up from here. So a great day yesterday, and these numbers here. So what we like to do at the beginning of the day. So this is your 1-day max. This is your 1-day min, and what those are the very likely going to hold the move for the day. So if they start to rally here, and this is a gap and go, we would expect them to have trouble and or stop and close below this 647.57 level. It's a really important level to have on your screen because it's a great trading level. So the 1-day max and min are great for those options. So if they trade up here, I'm always looking for a short here to reject this area, because this is where all of the resistance sits on the day. Same thing with the one-day min. If they come down into that zone, we're very likely looking for a buy signal to bounce off of that zone and reject that zone as well. In between those, you get the very, very strong levels. You get your call wall. So this is where the most calls are, where the market makers are going to want to defend each day, because if it gets above this, they have to pay out these calls. And you have a put support wall, and the market makers are going to want to defend this as well, because below this they have to pay out all the puts. So this is the highest level of put down here at about 640, excuse me. This is the highest level of call at 645. And then our full range is 647 down to about 637. So about a 10-point range today. That's great for trading. We like to see it wide. HVLs are just high volume levels, so another place that the market makers will defend. But the main levels are going to be 645, 647.50 basically, 640, and 637.80 or so. If you want these on your chart, it's called Mentor Q. You can see over here, MENTHORQ. They're incredibly important levels. We get trades off of them all the time. I do have a link down in the description for Mentor Q where you get 20% off. Please note that I do get a referral fee for that, but it doesn't affect your membership. In fact, you get a better membership because it's 20% off. And I only refer things that I use and that I love, and I only have 2 referral fees, or referral links. I refer TradingView, and I refer Mentor Q because those are 2 products that I use and that I love. I don't peddle stuff just to make money. I'm not here pushing products. That's not my game. But those are 2 that I love. TradingView. I built my indicator around it, and I love Mentor Q. I have it on my chart every day. So well, if you want your chart set up like mine, those are the tools that I recommend. Overall, well, let's do this real quick. When you get the indicator, okay, you'll go to my website and you will go to membership plans. Once you get there, you'll scroll down to where it says TradingView Indicators. You're going to want to put in the coupon code that I have on the screen there. You have 30% off your first month of the indicator. You get a 30-day money-back guarantee. So you get 30% off of this price today during the live stream. And on top of that, if you don't like the product, you get your money back after 30 days. So I always say, if you're skeptical, if you are hesitant, if you are unsure, you can get it, put it on your chart, use it, or don't use it for the month, just watch it or paper trade it. You can do one or the other, watch it or paper trade it, and then see how it did for the first month. You didn't have to trade anything, so you didn't put any of your capital at risk. You got to see how the indicator worked, and if you didn't like it, you get your money back. So there's no risk whatsoever in just trying it out. I always encourage people to do that because, you know, I want you to see for yourself. I can say all these things and I can put up all these numbers, but see it for yourself. You know, it's what do you have to lose? If it's something that will change your life, like it has so many traders, there's no reason not to give it a shot. 30-day money-back guarantee on both the yearly and the monthly. Today, if you get the yearly, you're getting Elliott Wave 4 Beginners course and Elliott Wave Advanced course, which is about $177 value. You get them bundled for that. You get $177 worth of courses for free with the purchase of the yearly indicator. Once you do get the indicator, it'll take you to a page where you have your instructions. Please read these instructions. They're here for a reason. You'll fill this out and give me your TradingView username so I can give you access to the indicator. And then down here, it'll tell you exactly the TradingView accounts you need. You'll need at least an essential account, and you will need the E-mini included $7 add-on for real-time data on the NQ and ES, and that is required whether you trade futures or not, because the indicator looks at the ES, the NQ, and the SPY all at the same time, and when it gets a buy signal, that buy signal has to come in on all 3 charts at the same time to show momentum and follow through, and that creates a very likely winning trade. So keep that in mind as well. If you don't have TradingView, I have a link right here to get a TradingView account. Again, I do get a referral fee for that, but you get a cheaper count, so we both win. And again, I only refer things that I love. So that's the only time you'll hear me talk about referral links, TradingView, and Mental IQ. And then we go through, you get to set up your indicators through TradingView, and then you set up your indicator overall, and then we go through our day trading strategy, exactly how we use it. We go through our trend day strategy, exactly how we use it, and our weekly swing strategy and exactly how we use it, so that you understand exactly how we trade with the indicator. And I did mention that we are up 72,000 on a 100K account, and I'm going to go ahead and get those numbers for you real quick here. And so you guys know, I'm not going to show you some sort of pie in the sky magic data. I'm going to show you real grinding data of what it takes to be a day trader. So some months are really good, some months are not as good, but consistency and following the rules are what matters. So here's our last 19 months. And you're going to see some months, $10,000 month, $8,000 months, $15,000 month over here, $9,000 month. But most months, and then on the flip side of that, negative 550, negative 6,000, negative 1,700, negative 2,000. You're going to have some losing months. That's just part of trading. If you don't understand that, you're going to be a failed trader, because losing is just an opportunity to learn, and every trader in the world loses. Every trader. If there was a trader that didn't lose, he would be a trillionaire, as rich as he wanted to be, because he never lost. So there's going to be some just streaks of good and bad. Percentages are just that, percentages. We probably have a 65% win rate or so, and the win rate is irrelevant. I talk about this all the time. It's about your risk reward. For instance, if my risk is 1 and my reward is 4, I only have to be right 1 out of 5 trades to break even. That's a 20% win rate. So win rate's really overrated. It's about risk reward, and that's what we've built, is an incredible risk reward model that delivers these kind of results. Most months are going to be $2,000 to $4,000. You can see 3,000, 4,000, 1,000, 2 down here. Over here you got 4, 2, 2, 4, 2. So most months are going to be normally between 2 and 4. Sometimes we have great months. Sometimes we have not so great months. But over 19 months we have 1, 2, 3, 4 losing months. So with 15 winning months, 4 losing months, and we're up $72,000 on $100,000 investment in 19 months. That's a 72% return on investment. You can't find that anywhere. I challenge you to find that anywhere. These are all documented, not just by me, by my members. So Matt, who is a member, chronicles all our trades and puts them out each month, and he has the numbers as well. So this is real professional trading and how that works. It is quite simply a grind, and it's not. There's nothing that's easy about life or making money. Win the lottery, I guess, is about it. You have to work at this. You have to follow the rules. You have to do things the right way if you want to win, and we give you all of that. All you have to do is follow the rules. All right. Good morning, guys. That was a long intro. Good morning, cats at home. Thanks for being here. Appreciate you guys hanging around and trading with me today. Again, highlighting the Invest with Jacob Pivot Point Pro indicator. As far as structure goes, we're looking at this 6480 area to be resistance, anywhere between here and 6502, so the 1236 and 1382. We're looking at an ultimate target of this move at 6534 to 6554 in an ending diagonal. We're in 1, 2, 3. So this should be wave 3 that we're in now. Remember, they're all going to be ABCs. So this is going to be ABC of 3 because this is an ending diagonal. You would look for a wave 4 to be a pretty decent pullback into wave 1 territory at 63, 65, and then back up towards that target at 63.50 to 63. I'm sorry, 65.30 to 65.50. That's what we would look for in a standard ending diagonal. Now, any break of this support here down here at 63.15 or so. Any break of that support tells us that the diagonal is over, and we're likely going to come down and test these lows and likely break through them at 62.50 or so. So for the ES, we are in an ending diagonal structure, and the way you identify that is the overlap. So this would be your 1 and 2, and then you get this move up, and then you get overlap, right? So overlapping structure right now, again, 65.30, 65.50 being our overall target, but we would expect one more dip before then. A couple of variations are possible. We would look for a potential for this to be A, and then you'd look for a deep B and then a C. I don't love that. I think that we're probably in the more direct route. And the other variation would be that you had an expanded B wave here. I don't think that's going to be the case either. So we've got to keep those on the table just so we understand when we're wrong, what we're looking at, and go from there. One of the critical things about Elliott wave theory, I always like to go over this. It's not about being right or wrong. It really isn't. Everybody thinks that it's some magical thing that it's supposed to be right every single time and blah, blah, blah. It has nothing to do with that. In fact, it's simply telling you the options of the market, and it tells you in both directions. At least I give you the paths in both directions so that you understand when the market goes up or down, what's going on. And then you look for setups. So the market can do infinite paths. Literally, it can do infinite paths. You can think up a new way to do a path every single time. Elliott wave boils that down into a few things and then gives you key support. That's what matters. And then with that information, you look for trading setups. You don't trade Elliott wave, you trade setups. And that's a really important distinction. Elliott wave gives you potential paths and key support and resistance levels. Trading is a completely different game from that. The indicator is not Elliott wave based, it is price action based because that's what trading is based on. And it gives you a very clean, easy, simple entry and exit. So we have a breakout over this high right here at 64, 67. I would expect at least a back test of that. And if that back test fails, then we're likely in wave 4 starting our path down to that 63, 65 area. If that back test holds, then we'll push higher towards 6,500. So this is how we start looking at key levels and understanding that, hey, if they break down below this and give us this kind of setup, we can get a short, looking for about a 100-point drop or so. JG, I thought I heard you mention something about a free training video on Elliott wave yesterday. Where do I find that if I heard correctly? So if you're a member of the rooms, Brad, you go to the website. So if you come over here and you go to members area, you can see your Elliott wave for beginners course, your advanced Elliott wave course. And if you purchased it, this one, Trade Waves Academy, does not come with a membership. You have to purchase that separately, but that's another course as well. If you're not a member and you get the yearly indicator, you get those 2 courses for free. So you can either get those courses for free by getting the yearly indicator or becoming a member of my rooms. Otherwise, you have to purchase them. On the NASDAQ, they broke out over the highs as well. NASDAQ is a little further along with a target of 24,048 to 24,138 on the NASDAQ. That's where we would be looking for them to potentially turn down and test this support. If they break down below this support I just drew in, so right here, we would look for them to come down and hit this 23.3 area. So about a 500-point drop would be potentially possible on the NASDAQ, should we get that set up as well. If they come down and hold from here, we would look for either 24,138 or 24,284. That's our next targets higher for wave 5. All right, we have about 10 minutes before the open. I think I've gone through everything. Remember, these are mentor Q levels. These are important levels to watch, but the indicator figures all of that out for you. So I like to have them both because I know where I'm looking for stronger buys or sells. For instance, if we're right here and we get a sell, I'm going to take it because the indicator knows what it's doing. But if I'm up here and I get a sell, I'm going to feel really confident in that sell. If I'm down here and I get a buy, I'm going to feel pretty confident in that buy. So those are just some key levels that we use from a price action standpoint, and really from a gamma and option standpoint, which is where the money is, and we follow the money. All right, about 10 minutes to the open. Last week, if you weren't here, we did good. I think we had 3 winners and a loser on our live stream, something like that. Or maybe just 3 winners. I don't know. It was a good live stream. We made money, did really well. Those are always good days. Day trading strategy. So we'll go over that real quick. We got a few minutes here. So when we're day trading, we get an entry. So let's just say our entry is 643 here, roughly, or 644, sorry. No, I'm not exactly on that, but it's whatever. So if our entry was 644, move it up so it is. There we go, 644. What we'd be looking for is to take a 20% win on the first half of our trade. So we get in the trade, starts going in our direction, things start going well. We look for a 20% win on the first half of the trade. Then we let the second half run to the next key levels. If it starts going against us, we have a 50-cent stop. So if we got in at 644, our stop would be 643.50. And if it comes down and stops us out, then we get stopped out. Now, these winners, these small winners, these 20% winners, that if that's all we get, so let's say we hit that 20% and then it fails and stops us out, these winners, okay, because we have more winners than losers, balance out our stop outs. Okay, so we may have some stops down here and losing trades. No big deal. The winners balance that out. What pays us and what gives us money and what we get very, very often are called runners. So we hit the 20% mark, we take half, and then the price keeps doing this, and we continue to make money on the rest of this. So the first take of the trades cancel our losers, and then the runners are what we get paid on, and that's how we develop a risk-reward system that is really, really balanced, because we never take a loss like this. So if price goes against us, we just stop out at a certain price. But if price goes in our direction, we get to try to exhaust price and take as much of a win as we can, which allows us to have exponential winners and capped losers. That risk-reward system allows us to build a winning foundation. And it's not about making $5 on any given trade or something, or $5 million on a trade, or whatever you want to say. However you want to say it. With options, I always speak in option price. So $5 would be a huge option win, because most of the time we're looking for about 30 to 50 cents. If you average 16 cents a day on 25 contracts, that's $400 a day. That's $2,000 a week. That's $100,000 a year. Just 16 cents on 25 contracts. Everybody thinks you have to have these incredible $2 wins. Nope, 16 cents. And that's what people don't understand for a 6-figure income. Now, if you're wanting more than that, obviously you need to make more or have more contracts, either one or the other. But the point being, you don't have to make a ton of money to get an incredible return. Most options are around $1 to $1.20, and 16 cents on that is going to be about 16% to 10%, just depending on the price of the option. So you're going to do well if you just scalp small wins and let runners run. Welcome to the stream, Daniel. Jacob, I'm confused on the longer time frames. I thought we were looking for a bigger correction. Did that change just by going to 670 now? We are looking for a bigger correction, Daniel, and this is the misconception that people have. So so think of it this way. When the market breaks support, we're looking for a big correction. The market hasn't broken support. So it's going to be in a bull market until that's done. So we have to understand where it's headed next, what the next targets are, and you know trade accordingly. The overall big picture hasn't changed. We're talking about micro count stuff. The big picture is still that we're looking for a major correction, wave 4, but we're not going to play for that until we see a reason to, right? So just because we know, well, we don't know anything. We literally don't know anything. Just because we think the market is going to correct doesn't mean we just blindly play for a correction. We need to see support break, we need to see a setup, and then we trade for that setup. We are looking for a bigger correction. When that happens, we'll trade for it. But until then, we have to trade a bull market because that's what we're in. Elliott Wave isn't here to tell you exact, oh, we're definitely stopping at 645 and turning down. It's here to tell you that after this bull run, we're expecting a major correction. I still expect that. I'm very, very confident in that. I have no reservations about talking about it or saying it because I know what's on the bank balance sheets. I know what is going on under the hood in the economy. I follow the economy very avidly, and I know what we're heading for. And it's not a pretty picture. But until the bull market breaks, it doesn't matter. The bull market is the bull market. So you got to remember that, yes, I can be expecting that, but that doesn't mean it's going to happen today. It's like saying it's going to rain between 3 and 6 o'clock. I'm expecting it to rain in that time frame. I don't know exactly when the clouds are going to get here because the wind is adjusting all the time. Sometimes the wind's blowing 50 and sometimes it's blowing 10. So I'm not sure when the storm's going to get here. I'm not a weatherman. I don't even know if that's true, how storms work. I'm just telling you that's the thing. It's like when UPS call or you order a couch or a repairman. They're like, I'll be there between noon and 5. You know they're coming. You just don't know when. So you just have to understand that the market gets to do what the market wants, and trying to predict the market in a sense that you're trying to predict the exact top is an extraordinarily hard thing to do. So you don't try to predict the top. You let the market play out. You let it run until it's done, and it will tell you when it's done because support will break. If I get the indicator, will I be able to back test it on TradingView myself? You can back test it if you want. The issue with back testing is you can't put in the parameters we put in. You can't say, show me where it takes 20%, where it was a 20% option to win. You know what I mean? So you're not going to get the same quote-unquote results because one, there are some what we call one-bar winners, and you guys have seen them live on here if you've ever been on the days or the stream. We get in a trade, a short, the market goes down, we take a profit. In the same 5-minute bar, the market goes back up and we get stopped out. The sell signal goes away, and you never even saw the trade on the you don't see the trade on the chart, even though it came on the chart. So the sell signal came on, we wrote it down, we took our profit, it went back up, the sell signal went away because conditions changed. We had a winning trade, but you never saw it. Vice versa, you wouldn't see the losing trade where a buy signal appeared, it failed, went down, the buy signal went away. So there's trades you can't see. So you're not going to get the same results. But if you try it for 30 days, you can front test it, you can back test it, you can do whatever you want, but you can see it works how I say if you just follow the rules. Welcome to the stream, Jose. Good morning, Andrew. Welcome to the stream. Glad you guys are all here. We're getting ready to open the market here in 4 seconds. So let's get ready for that. We'd be looking for a sell signal here at the open. A little. Oh, no. Okay. Whew. Totally messed your shit. We gotta sell. I gotta get moving here, guys. All right, we are going to get in at 6:45 at 1:15. 6:45, 1:15. We are in a sell right now. me get that updated. Oh no, it's way behind all of a sudden. Our stop is going to be, we'll just make it 6:45.25 because I didn't see where we were at. Okay, and at 1:15 we are looking at 11 and a half, so 23 cents. So 138 would be our first take. Okay. So we are in at 6:45. We have a 115 cost here. Let me zoom in so we can see. Sorry, guys. That snuck up on me. I answered a question and got a little lost in the trade there. All right, so we have VWAP in the 21. Very good support on the 5-minute, on any chart really, but very good support area to look, and resistance area. So when they're above it coming down, it's going to be support. They spiked off of it. When it's below coming up, it's going to be resistance. Okay, let's see here. So we need set our stop at 138. Set our take at 138. So our call wall is right here. This is a great place to trade off of. Whether it works or not is irrelevant. It's a great place to trade off of because the market makers want to defend this zone. So we'll see if they're able to here on the first bar. We may or may not get that. Okay, there's our stop. So we got stopped out for 91 there. Probably could have done a little better on that, but that's all right. That was my fault for not being prepared. All right. That was going to be a stop out either way, so that at least is okay. So we are in a might be a short live stream today, guys, because we are in a trend day potential here. So we're above the pre-market high. When we open in a gap like that and it gaps up, as long as the next pullback holds the VWAP in 21, and then, okay, so it does that and then makes another high, wherever this high stops. If it does that, then we are in a trend day scenario, and we don't trade trend days unless we get on trend trades, which you usually don't get because it's trending. However, what we do have is an ADD that opened high around 1362 and is falling, so that's a good sign short term for the bears to get a short trade if they give us. So we'll try it. We'll try one more short here and see how it goes. The overall philosophy here is that key support and resistances work way more often than they don't. So this is a key resistance zone, and so way more often we're expecting a failure there than a breakthrough. Obviously, we got a breakthrough first for now, and we'll see if they spike it and reverse it, and we'll give them a chance to do that. If they do spike it and reverse it, we would expect them to come down to 642.31 and see what happens at your pre-market low down here. And then if they fail, if they spike it, reverse it, and fail up here off of support, then we would expect them to come down to the pre-market low because it's a failed breakout. We'll be looking for another put. Since our sell signal went away there, we can get another sell. Give them one more shot to fail here. This is, guys, this is just trading, right? So We come in at key resistance. We get a sell signal, so we short, and if it fails, it fails. That's a good trade. We didn't short for no reason. We shorted off of a key area, and we would expect that key area to reject more often than not. In this case, it didn't. Morning, Rambler. Welcome to the stream. Morning, Alexi. Jacob, good afternoon. Can you briefly tell levels you think market will do correction if we get our fifth wave complete? Midterm range. Appreciate it in advance. You have to be a little more specific on that, Alexi. Are you talking about a bigger correction? I know you said medium term, but the levels right now aren't there. I mean, we need to break a level first, and the main level I would look for them to break is the 6250 to get started. So that's what I would be looking for as a just general start to a bigger correction. And then we'd have to see, what kind of structure we get, what kind of volume, follow through, price action, all the different things that go along with this. So we always like to look at supporting evidence. Dow Jones Transports has turned red. The banks are pretty green, so the banks are doing okay. RTY is very green, so it's doing okay, leading to the upside. So there is potential for this to market to gap and go today, 647 being the likely cap. But we are seeing the ADD fall pretty quickly here to start. And usually when the ADD is falling and price is going up, it's going to be a failed breakout or a reversal at some point. So we'll see how that works out. Let's see what our volume look like on the first plot. Let's see right there. Pretty decent volume. Pretty decent volume there. So we'll see how the volume is overall today and what kind of overall. Sorry, I'm moving this all over. What kind of overall price action we get today. Right now we are in a potential trend day setup. So we got to be cautious on shorts and only take longs. And again, because you're in a trend day, you very rarely get a long, because get a long, not get along. Because it stays in the buy cycle the entire time. It's already issued a buy way back here, so it's not going to issue another buy. It doesn't need to tell you to buy again. It already told you to buy way back here. So we don't trade pre-market, but that's how the indicator works. We're in a buy, so it's not going to tell you to buy again. We don't trade pre-market, so we wait for the next signal. There's always another trade coming. You never FOMO it or revenge trade or whatever, because if you chased here and this reverses from right here, then you got trapped. So there's just no reason to do that. You think it's possible to have a correction instead of Christmas rally? Yeah, I mean, that's happened before. Typically, that's not when it happens. Usually, if you're going to see it stay bullish into the end of the year, then January is where you're likely to see the reversal. But we've had Christmases that didn't give us the Santa Claus rally before. NQ a little bit weaker here. Not a lot, but a little bit. We have a red bar on the NQ and a green on the ES, so we'll see who kind of wins this battle. Remember, guys, there are no magic bullets to the market. It's all about consistency and executing your trades. It's all about understanding that there are swings. Nobody's bankroll goes straight up. And it's all about understanding, keeping your emotions in check, using good risk reward, and following rules. We play probabilities. That's all trading is. It's statistics and probabilities. And we try to not go against those things as much as possible. So what's more probable today is what we're looking to trade. And that doesn't always work out because just because something is um, probable doesn't mean it's a lock. You know, I forget what game I was watching this year. It was, I think, a basketball game. Oh, it was a Knicks playoff game, is what it was, against the Pacers. And with like a minute and, I don't know, 45 seconds, the Pacers were down like 12 points. And the Knicks were like 95% to win that game. But the Pacers hit like 6 straight threes, and they ended up winning the game, even though they only had like a 5% chance to win the game. So 95% of the time, the Knicks are going to win that game. Did they win? No. Because there's still a 5% of the time that happens. So probabilities are just that. You're going to double down on 11 in blackjack against a 6 because it's a good statistical play. Do you win every time? Of course not. No, you probably get that 2 to give you 13, and then he turns 17 or something. But you have to understand that math is math. And for every winning side, there's a losing side. So that there's never a magic bullet. It's always just probabilities. NQ trying to follow through to the downside a little here. Again, not anything that you're like, wow, they're killing the NQ. But the NQ now has 2 red bars, and just now getting one on ES. So might get a sell signal here. NQ's ready. ES is not on board yet. And we don't trade until we get the sell signal. We don't guess at when it's going to come. The indicator is the indicator for a reason. It compiles data that says it's more likely to follow through. And so we wait for that. Options prices are not pricing in a huge move today, or a lot of volatility, I should say. You can still have a decent move, but not a lot of volatility. That doesn't mean we can't change things and see volatility, but it does usually mean that the market's not going to go crazy to the downside. Who do I like to imagine is on the other side of the trades? That's a good one, Matt. Oh, I don't know. Who do I hate the most? Robin Hood? I hate Robin Hood, that's for sure. I wasn't even involved in that, but I hate companies that screw people over because that's what I stand against. And Robin Hood screwed everybody over on the whole GameStop deal. So I guess I hope Robin Hood's going bankrupt on the other side of the trades. I know they're not, but because they'll be bailed out by billionaires like they were in the GameStop deal. But I hope they are. This is interesting. You're now getting a third red bar on the NASDAQ while ES has all green. So if you go to NASDAQ real quick here. Not that NASDAQ's red, but it's certainly trying to get below the 8, which is a momentum indicator. and into this 21 down here. So either it's going to give a small pullback on NASDAQ and then catch up, or ES is going to catch up to NASDAQ. Let's see if we get this sell. Usually NASDAQ is your leader, so if NASDAQ is starting to turn down here, I would expect ES to follow, but again, until we get a sell signal or get any sign of weakness from the ES, we have to just kind of sit and wait. Morning, Steph B. Welcome to the stream. I guess welcome to the stream, Matt. I can talk to him like that. He's a high school friend. Long time friend. Yeah, ES is not showing any weakness here. So, they're getting closer here to the 647. Change. I don't know. Not close enough though. They have eclipsed the call wall here, which usually produces exactly what we're seeing. Squeeze. So we'll have to see if they can give us a pullback into the 21. We may give them, I don't know, I may not give them too much rope here today because the ADD is now improving. It's made a new high. We're seeing RTY strong, NASDAQ recovering, ES is at all-time highs. We're squeezing. We're above the pre-market high. This is a trend day. The only weakness is the transports. Everything else looks pretty strong. Let's go down. Nvidia's red. Microsoft's flat. And the Mag 7's pretty strong. So it's a buy everything day. It looks like gold's up, silver's up. Buy it all. Bitcoin's up. Well, don't buy the 30-year, I guess. It's a buy everything kind of day. We may give them one more chance at a short, but there's no key level up here. If we go over to the 6,500 would be our key level, but there's no call wall there. Let's go to SPX and see if there's a call wall at 60. Or ES, see if there's anything at 6,500. Okay, there is a call wall, it looks like. Call resistance at 6,500. So we'll give them a chance to fail 6,500 here. It's a key fib. It's the 1382 as well as 6,500 round number psychological deal. NQ still kind of weak, so not super weak. I don't expect a big pullback or a failure, but we might be able to scalp a little bit of money here. So we'll give them one more chance off of 6,500. If they blow through that, then well, that might do it for the day. Quick, easy in-out day where we don't do much of anything. We really are pumping IWM. Yeah, I mean, they're back at that, or over that 2,300 level, which was some strong resistance. So that's a big spot for them. All right, we're at 6,500 on the ES here. Let's go back to the SPY, which is where we reside. Let's see what's on the SPX. And if you watch my overnight video, guys, I said that, and if you were in the room yesterday, we just, in the closing video, those kind of bars that we got yesterday, that big long green bar that breaks out almost always has follow through. So you're seeing that follow through now. The question is, how high do they follow through? They are above the 64, 76 call, 75 call resistance here on SPX. They're at the 6,500 zone on ES. So we could see them push to 6,500 SPX. Is there a one-day max? Yeah, there's 6,500 call resistance SPX. There's a one-day max just above. So if they start moving quick into those zones, I would entertain a short or one from right here if we get one. Because we're at that 6,500 level on ES. It's not what I would call an incredible place to short. You don't have confluence on the call resistance. It's just on ES. I do want to look at Q real quick, which hit 24,000, which is where we were looking for it to get to. After the 3 red bars, it does have a strong green bar, so you can see why we're not getting the SL. It's not weak enough. The NQ's one-day max is all the way up here at 24,160, so plenty of room to run on these charts. The trend day brewing. We'll give them one more chance at a sell. Again, only off of this level, and then might be a quick session, guys. Trend days are what they are. They're not great for trading. Don't forget to hit the like button if you like the information that I give out on these streams. I do appreciate it. It helps me spread the word and get to grow the channel. All of these all-time highs have been made on negative divergence, and big negative divergence at that. So overall, the market does have underlying weakness, but until that underlying weakness becomes overlying weakness, it is what it is. It's a bull market. And, you know, for most of you, that should be okay. Your 401ks are at all-time highs. My 401k, I have some in the tied to the S&P, about 16%, and then the rest is in precious metals, which has doubled since we put our money in last year. So if you're not familiar with our rooms and you only know the indicator, last April 2024, I told my people to put their money into the precious metals fund EK Wax right here. We got in at around 48. It's now at 98. So more than 100% gain on that in a year on your 401, your retirement money. That's pretty good to double your retirement money in a year. So hopefully everybody who followed along with that is really excited about it. And you know, I still have about 16% of my money tied to the S&P until support breaks, and then I move it into cash or something else. But it's not just about trading, guys. It's about how to manage your life, how to manage your future. And I don't mean manage your life like I'm going to give you some Confucius life lessons. That ain't me, but I'm not giving out good life lessons, I can tell you that. Drink bourbon and gamble. Those are not good life lessons. In moderation, guys. I'm not some kind of psychopath. But at any rate, teaching life about finances and how to manage your 401k and your retirement and those types of things. Let's see here. We're going to get one. Oh no, we will not get a sell here, guys. The NASDAQ has been weak for too long, and the ES hasn't caught up. I will tell you that we just got a sell on the ES, and we had one on the NASDAQ already. So if you want to take a sell here, that is not a terrible thing to do. Keep in mind you are coming into support, these two levels. So the NASDAQ really screwed things up. If we go over the NASDAQ real quick, the NASDAQ was weak this entire time, so it already had a sell signal going. You have to have them in conjunction. And if you look at the settings on the indicator, this maximum candle between the three tickers, so it's looking at the SPY, the ES, and the NQ all at the same time. And all of those have to be within 2 bars on their sell signal. So what that means is if the sell came on this bar right here, then the ES sell had to come at least on this bar right here. The NASDAQ sell came back here, and then the ES just came here. So it's 4 bars apart, so it was more than 2 bars apart, 2 5-minute bars. And unfortunately, that really kind of hosed us here because this would have been a winning trade for sure. But that's how it goes. That's trading, right? So there are going to be days that you don't get every trade because of whatever reason, name a reason. And that's okay. That's part of trading. There's going to be another trade later. And all this does is potentially open up the door to give us a chance at a long. So not ideal. We would definitely want to see the you see the ES just now got its sell signal here, whereas way back here the NASDAQ was weak. I was talking about it earlier. So it's got to be at least 2 bars, or at most 2 bars apart, I should say, to get that. Otherwise, it won't issue a sell. So no trade here, unfortunately. That would have been a winner on the downside, I believe. Yeah, I don't know. I got my bars pretty big. Maybe not. But that's why we don't do that, because if the NASDAQ isn't in sync with the ES, you're not likely to get follow through as you're seeing right here. So we've held VWAP here. If they go back and make a new high, then trend day parameters have been met, and we have to sit on hands for the rest of the day. That's just the rule, no matter what. Even if they collapse the market, we gotta do what happens more often than not, and more often than not is they come down and hold either the VWAP right here or the 21, and then they make a new high. If that happens, more often than not, they're going to continue higher. Again, just probabilities. When the probabilities are against us, we sit on the sidelines. Now that we have NQ on short already, short on SPY will be suppressed. Yeah, yes, that's what we just went through there. The NQ was short at 640, and ES just went short at 655, so it was 3 bars apart, unfortunately. Using the indicator on a single stock, the settings are all set to that stock only, correct? Yeah, so if you're going to, so let's, well, we got a second here. So if you were going to use this on Microsoft, you would change this to Microsoft. Ticker 1 would say Microsoft here. Ticker 2 would say Microsoft. You just click on it, type in the symbol, and then put it in there. And do that for both. And then change this to 1, like that. And then you'll see it. So you'll see, guys, if I expand this to 4 bars, you should see the sell signal come up. Yeah. So that's because it happened 4 bars ago, all the way over here. So we don't want that because that's not the correct setting. It gets you too far away. This right here will be a key. If they can break down below the 21, they can potentially reverse this trend and come down into the pre-market low. But again, they have to do that. I never saw ES or NQ short. That's because you have the settings on your Pivot Point Pro. If you want to see their short, you got to go over to, so we have to go to ES here. If you want to see where ES got short, you go to Pivot Point Pro and you go to settings and you change this one to ES. Click OK, and there's the sell right there. You guys aren't supposed to see things that don't matter. And that cell doesn't matter because we don't have a cell that's in conjunction with the other two tickers. So the reason you don't see the cell is because the cell wasn't issued. That's super annoying that the NQ gummed this up for us. This was a winning trade. But again, we don't. You can be annoyed with it. You just got to move on. Wait for the next one. This will be a key area here. You have your call resistance, so you can come back test that. So if I pull this over here real quick, so right here you have your 21 moving average as well as your call resistance as well as this spike low back into it. So if they break this, then we're very likely on our way to 642.60. So that'll be an interesting. Actually, they'll need to break 644.50. If they break 644.50, very likely we're going to head down to the pre-market low. Confused because I see them usually when the indicator is set up on SPY, even on NQ and ES. Yeah, that's when it comes on the SPY, you're going to see it on all three. That's because all three are in conjunction. But when they're out of sync, you're not going to see them. Sell signal, you can see it if you change the parameters to both BES. Yeah, if you, it then just becomes an individual stock. The whole point of the indicator, at least for the indexes, is trading momentum and price action. So it's a combination of momentum and price action where we're looking for key levels, volume, momentum, lack of participation. So in other words, a very, very low volume move up. When volume starts to come back into the downside, the indicator starts to look for that to be a sell, things like that. All of those types of things matter. All right, they've broken through VWAP. Next stop, the 21, and we'll see if they can hold. This will be the key level here. If they fail that level, then 644.50 is very likely, and if they fail that, then the pre-market low. Keeping in mind that NASDAQ has hit its target, so we were talking about 24,035, or 48, excuse me. They spiked through it just slightly. Let's see what was the high today on the NASDAQ. 24,068, so 20-point difference on a $24,000 stock. They rejected. Now they're at consolidation right here. This is going to be some support, and then they'll have some support down here at 23,921. And then if they break that, we can see a bigger drop from the NASDAQ. Remember, guys, we are in a trend market right now. We're above the pre-market high. We're testing 21 and VWAP until they can break down below those. We would assume this is an up day, a trend up day. But they have to get back above this high here at 646.20. If they do that, then we're sit on hands the rest of the day. This would have been the short we were looking for off of 6,500. Unfortunately, the NQ kind of messed that up. So we'll see how they react here, if they're able to climb the ladder or not. August is traditionally a bad month, especially the second half of August and into September, so it would not be shocking to see that wave 3 top. Remember, we talked about this being a wave 3 topping zone, and we would look for wave 4 down from this area into wave 1 at about 63, 68, and then back higher. So certainly wouldn't be shocked to see a breakdown here that either comes down and tests or either breaks down bigger. That's also a possibility, but at least comes down and tests that 63.80 area. Hey Dan, welcome to the stream. During this hurry up and wait time, you may want to share it with the group here about the RTY and how you use it as a secondary indicator. Yeah, the RTY is a good one for what we call supporting evidence. That's a great comment, Dan. So the RTY is extremely strong today, and the markets are strong. So what that means is we expect the market to continue. The ADD is also at 1450 positive. It hasn't really fallen off. It started to fall off at the open, but now it's climbed up higher. And the RTY is strong. So what I use for supporting evidence, when I'm just looking at the overall day, it's very unlikely that the market is going to break down if the RTY is this strong, unless the RTY joins the party to the downside. So when RTY is strong and the market looks weak, it's unlikely the market is going to melt down unless RTY joins the party in a big way. Same thing when the market is the market seems strong and RTY is weak. So lots of days the ES and NQ are green and RTY is red. Unlikely those days are going to trend and break out. Those are going to be generally choppy days. So when they're all in sync like they are now and RTY is leading, that generally leads to continuation to the upside. Unless, of course, RTY is able to start falling. Are there exceptions? Yeah, there's rotation days where they're rotating out of NQ and into RTY, so NQ gets hammered and RTY pumps. But for the most part, if the Dow transports are green, the banks are green, and RTY is green, it's going to be hard for the market to be red. If those things are red, it's going to be hard for the market to be green, at least in a trending way. So it could be green, but maybe not green like this, green like this. Hopefully that made sense. All right, testing the 21 here. They get to the 21. The Bears have an opportunity to push this down. Again, the pre-market low would be the target or the gap close. We're about the same place. Yesterday's close is 642.65. Pre-market low 642.60. So if they're able to sustain this move down, I would expect them to come down into this area. Maybe not in a straight line. They could do this. But I'd still expect them to come down into that area if they can sustain the break of the 21 here. NASDAQ has moved through it into a full sell cycle. ES is still working on it. So you can see RTY, hit a couple down bars, but these last two have been pretty strongly green, and it's back up at its highs. The RTY is not weakening at all. The advanced decline is not weakening at all. Bold is green. Now, can they start weakening from here and RTY catch up? Yeah, of course. That's definitely a thing that can happen. But typically, you're not going to see the ES completely and the NQ completely break down when RTY is not breaking down with them. What's that new high for Bitcoin? No, they were 126, right? Or 123. Yeah, they're close. Bitcoin right back at its all-time high. Just while we're taking a minute here. Let's go through a couple stocks while we wait. There's nothing going to happen here if the market's out of sync. So take a look at a couple things. So NVIDIA eclipsed our 172 target. They came up to it, failed, came up, failed back to it, and now they're above it. So I would look for 201 on NVIDIA. If they break down below 170, they do have a little bit of support at 165, but I would expect if they break below 170 to come back and backtest this 155 area on NVIDIA. That would be a decent way forward. You'd like to see a 4-5 here. So if they're going to go to 200, you'd like to see them do something like this. Give a more complete structure. Microsoft trying to rebuild off of the sell-off here. This is a high volume sell-off. You would love to see a better 4-5 here, so one more high wouldn't be the worst if they did this and then came down. But Microsoft doesn't have a lot of support under it, So if it does break down, it's very likely headed to 468. So if they can break back below 517, Microsoft will look for them. They have a little bit of support here at 500. That's a round number. The 21 was there at the time. They spiked this one. But ultimately, you wouldn't expect that to hold here. I would expect them to come down to 467. Gold still just consolidating in that triangle up here. Very sideways, flagging consolidation. As long as they hold that area, we're expecting the next breakout to the 350 area. If they fail that area, we're looking at 290 to 270 to hold pullbacks. Bitcoin. Came up, back tested the support area we drew in here perfectly. Now they're back at the highs. We would expect this to be a breakout again, looking for that 125 to 140 zone next. So 125 to 140, this 126 to 1382. I'm sorry, this 1 to 1382. That would be the zone we'd look for next, with that 135 zone being kind of that sweet spot. I would look for that to be a potential major topping area for Bitcoin. But again, we don't predict that. That's just an area we're looking for a top. It's like a thunderstorm watch, right? Or a tornado watch. The conditions are right for a tornado, but they may not materialize. The conditions are right for this to be a topping area, but it may not materialize. So there's a few just to go through to give you kind of a heads up on where we're at and what we're looking for, while we wait for the market to decide what it's going to do. So far, they're trying to hold the 21 here. If this third wave is done, where's the target for the fourth wave? Wave 1 territory, because we're in a diagonal. 6380 area on the ES. So about 110 points down, so about 635, 634 on the SPY. Trend days tend to be slow, grindy days where it's kind of boring. You don't get a whole lot of rapid movement. It's kind of what we're seeing right now, kind of a dull move down. Slow grind up here, slow grind down. You're going to need to see some acceleration and momentum if we want to see any kind of major move today. Otherwise, grind higher would be the most likely outcome, just based on the ADD right now, the Volt right now, the RTY, the overall market health and breadth looks strong. So unless the bears can start to accelerate, I think their best shot is the pre-market low. We did have good volume, and volume sticking pretty well. You're not seeing a significant drop off in volume right now. Let's see where we're at in comparison to like yesterday. Yeah, almost all of these bars are higher than yesterday, so we are seeing, a potential for a top with volume. That would be interesting. It's not exactly a topping candle. There's no volume at the exact top, but we'll see. I think that most likely grind higher is the scenario today. Maybe tomorrow PPI data will encourage it down. It's possible. I mean, it's a catalyst. CPI is usually a more volatile of the two, but neither of them have been that crazy lately. Inflation's not the headliner anymore. although it should be because it's out of control still. They can say what they want on their inflation report. I buy groceries. My wife and I were just talking about, I forget what we were, it was something at the store she buys all the time, a makeup product or something, I can't remember. But she said, I distinctly remember buying this 3 years ago for $2, and it was $4.25 at the time, or it's $4.25 now. In 3 years, it's 112% inflation. In 3 years, we're not talking about when my dad was a kid and could get Coke for a nickel. We're talking about 3 years' time, over 100% inflation on household goods. That's unsustainable. Saw coffee grounds were on 20% sale yesterday for the price they were at standard last year. I mean, a cost of living increase for most people is 3 to 4%, and you're seeing the cost of groceries go up 100%, 20%, 50%. I mean, that's not sustainable. That's not going to work. That is going to create economic disaster. That's why debt is so high right now. Banks are carrying such an incredible amount of debt right now. In Las Vegas, and we're starting to finally see that. So these are the things, guys, that take time to play out. We talk about credit card debt is maxed out right now for higher. It's higher than it's been. I think it's either in history or since like 2000. I can't remember. It's a long time. Let's say that. That takes time to play out through the economy. And I was just talking to my buddy who works in Las Vegas tourism, and tourism is down 40% in Las Vegas this year. 40% because people don't have any money. Their credit cards are now maxed out. They can't travel. They can't go to Vegas and max out their credit card because it's already maxed out. If Vegas is seeing that kind of cut, then other people are too, and it's going to come through the economy. My other buddy's in Vegas construction. He has his own company down there for traffic, and their revenue is down $5 million this year. When there's, that's a significant chunk of their revenue. They're not a huge company, so those things take time to play out through the economy and reverberate. But it's all playing out. It's all happening. In Ontario, Canada, beef is up 40% from last summer. Yeah, I mean it's insane. I went to get steaks for us for our anniversary. It's my anniversary today. So there's a positive note. In the last 3 weeks of shit, I went to get steaks. They were $20 a pound for choice ribeye. Choice, not even prime. $20 a pound. That's insane. Like literally 3 years ago, they were $9 a pound. Do LS and SS also have to print within 2 bars of each other on the charts? No, those are a little different. Those stops come up individually on the charts. They're not correlated. All right, the breakdown here does point us, guys, to the pre-market lows. So 642.65, very likely target here. We are seeing RTY start to weaken a little bit. So if RTY can get on board and start to really come back down, I mean it's over 3 times higher than ES and about 5 times higher than NQ, 6 times higher than NQ, percentage-wise. So it's carrying the torch right now. If RTY starts to crumble, you're going to see some selling here fairly quickly. At least down into the pre-market low, and then we'll see what happens. So we talk about all the time in my room, failed breakouts lead back to the pre-market low, failed breakdowns lead back to the pre-market high. Pre-market low down here at 642.65. Very, very likely target. Coming into some support here. This is where they came down and chopped all night. So right in this 644 area is going to be the kind of key for this initial move down to get through. If they can get through that, then the pre-market low is going to gap close is very likely. If they give me a back test here into the VWAP, or I'm sorry, into the 21 and 8, and then fail it, I may take a short-term swing looking for this pre-market low and see if they can break down from there. But that's all, ifs, a lot of ifs there. So we'll see what they give us. Where's the NASDAQ? NASDAQ's already through that consolidation zone, so it's coming down into its next support. Its pre-market low is 23.921, and its gap close is 23.934, so these are very likely targets. In fact, they hit that target overnight. So I would look for them to come down and test that again. We talk on inflation reminds me that restaurant stocks are having a bad year. Main Street doesn't seem to be doing well. CMG down 30% year to date. Kava dropped like 20% after results today. Yeah, I mean, I think people are eating out a lot less. It's expensive. I mean, I used to not really care too much about restaurant prices until lunch got to be $100, and I don't understand that. I got 2 sandwiches and a couple of teas, and my daughter got some chicken fingers, and I got to pay $100. Like, I'm exaggerating a little. I mean, but lunch was always a $25 thing if you sat down at a restaurant. If you went to McDonald's, it was like a $10, $15 thing. And now it's, McDonald's is $30 if you want to feed your family. And that's if you want to feed them shit. McDonald's is shit. Except for their Egg McMuffin, it's delicious. What kind of lunch are you drinking? Yeah. All right, so maybe the drinking lunches are $100, but still normal lunches are like $50, $60, and you're not getting anything but a salad and whatever. But yeah, it's stupid. A glass of tea is like $3 now. It costs 3 cents to make a glass of tea. It's 100,000, what 100,000, 10,000% inflation. No, more than that. See, the math's even too hard to do. Markup, not inflation. Point being, things are out of control. All right, we have completed a sell cycle on both NASDAQ and ES, so we will be looking for a buy now, just so everybody's aware. So as of right now, I am sitting on a 644 strike for a call, should we get it. I'd like to see it come off of the gap close or pre-market low area. I don't really want to see it here because I think it's going to be capped at the 21 or VWAP. So I'd like to see him just come down and tag this really quickly and give us a buy signal off of that. But again, lots of ifs there. Appreciate you guys hanging out. It's a slow moving day here. Kind of stinks in Q got out of sync up here. This was a nice sell that we got just broken up over two different charts. It did not work out well as far as syncing it up. So that was annoying. ADD is softening a little, Volt is softening a little, RTY is softening a little. If you can start to get RTY on board here with a more complete follow through, it's trying to break through the 21. It still has VWAP below it here at 2306. If you get it below VWAP, they'll come down and test 2300, and then we'll see. But RTY is still going to be the fly in the ointment for any kind of major move down. Why is it complete now? What do you mean? You're talking about the sell cycle? It's not complete. It's in a sell cycle, meaning that it has completed the transition from buy to sell. So it's not complete, meaning the move down is done. It means that we are no longer in a buying cycle on the ES. We are in a selling cycle. So when you get the sell signal up here, you're technically still in a buying cycle. The market was buying. The indicator saw weakness right here and told you, hey, you should start selling this market even though we're in a buy cycle. Then it works its way down, and at some point through here, conditions change into a selling market. So it's going to continue to follow through that on that momentum. And then when the indicator sees weakening momentum, key levels, volume, and everything else come into play, and all of the conditions hit for a buy signal, you get a buy signal. It's still technically in a sell market, but it's seeing all the weakness and the support come in that it thinks the sell market is going to weaken and reverse. So the whole point of the indicator is to identify when the cycles are weakening, if it's at a key level, if the volume is right, if the other conditions we put in there are right, the momentum indicators are giving certain readings. There's all kinds of things that we look for, and assuming enough of those things get met, it issues a buy signal, even though we are in a selling market. Hourly SPY is a big ugly candle. I don't know if it's big. It's probably like 3 points or so. Let's look at it real quick. Yeah, I mean, for the last hour, it's engulfing almost, not quite getting it above its wick, but basically engulfed the body. It's at the 8 on the hourly, which is a momentum zone. It's also at this shelf of support right here. So this is going to be an interesting spot on these last 23 minutes. They're either going to buy this back up or fail. 21 on the hourly is down below this shelf, so the 642.32 area is right below the close from yesterday. So I can see them spiking down into this 642.10 or so area. If they're going to come down here, spike it, and then go back up. Again, a full-on meltdown would take some work from the RTY, and it's back up at 20 now, so it's not really given a whole lot of weakness yet. just below this shelf of support. Just trying to spike back through it. Actually got right down to the bottom of it, so we'll see if this area can hold for a small bounce anyway. Hey Will, welcome to the stream. Hi Jacob, is Wednesday going to be the usual live stream day? Yeah, we do it every Wednesday. And I'm usually on at 6 a.m. Pacific, 9 Eastern to start the day. And then we go until either trading dries up or we get a trend day or something happens that causes us to end the day of trading. Right now we're looking for a buy signal, a potential buy signal if we can see a reversal here. If the bears can't close the gap and get down to the pre-market low, that is a weak signal. It means the bears are pretty weak today. Failed breakouts almost always bring you back to the pre-market low or the bottom of the range, whatever the range is, in this case the pre-market low. While we're sitting here, guys, if you're staring at your screen, don't forget to hit that like button. It's super simple and easy. Try to give you some value with other stocks and different things so that we can fill this time of no trading with information and value as best we can anyway. Commenting and sharing helps as well, but I'll just take a like for now if you could do that. Don't forget there is in the description, should be if I did it right, there's in the description is links to Mentor Q where you can get the levels that I have on the screen. Not the little levels, that's a different one, but the major levels, the call resistance, the one-day max, the put support, the one-day min, basically where we're expecting the market to be contained by resistance and support. Those are great levels to just have in general for trading, even if you're not using the indicator. No weakness yet in the sell cycle. See if bulls are able to find any love here. We are seeing ADD down at 1290 now off of 1500, so it's falling a little. That's a little bit helpful. You want to see the RTY start to come down. It is okay. It's back to 18.5, but it was up over 20. So a little bit of weakness coming in. Volume is actually maintained okay. Certainly not blowing out of the water, but you're not seeing this big, move down to zero real quick. So sometimes you'll get that first initial spike up and then on volume, and then it flattens really fast and goes down to almost no volume. And today it's stayed relatively decent from a overall standpoint. So, when identifying a trend day, we broke the pre-market high, right? Broke the pre-market high, made our top, and then the qualification for a trend day is they have to pull back to VWAP or the 21, hold, and then if they made a new high, then it would be a trend day. They had to come back and make a new high here. They failed and broke down, so now it's more likely we come down to the pre-market low. Again, that doesn't have to be direct. They can definitely come down to the pre-market low by doing this. But that's more often than not, that's going to be the target, at least the first target. They can go, of course, they can go past that. All right, let's see if they can spike the spike low, if they can get a buy signal here. Good news, college football 10 days while we're waiting. Oh my gosh. Brad, you have no idea. I hate the summer sports schedule. It is the worst. Baseball is the worst sport of all time. No, that's not true. Soccer is the worst sport of all time. Sorry, guys. I know I have a lot of overseas folks in here, and that's a big deal to you guys, but soccer is just excruciating to watch. Maybe if they didn't, act like they broke their leg when the ball hit them and get carted off and then come back in the game 2 seconds later, I'd respect them more. But soccer players in the game is just awful to me. My stream probably just went down by like 20%. Baseball's the worst. Summer's the worst sports ever. I can't do it. I can't wait till football starts again. Nothing personal. When I was in the Navy, I knew that they took soccer seriously overseas, and in different countries. Obviously in Mexico, Canada, all those places in South America, basically everywhere except here. And we were in Scotland, and England was playing Germany in a match. We were at a bar, and they were all screaming and cheering, and then I don't know, a guy from Germany who's pretty good gets a breakout, I guess, and the guy in the bar, you can hear him say, "This is where this guy always kills us." And sure enough, he goes down and scores a goal, and the guy next to him smashes him in the chest and knocks him to the ground, and then screams in his face, "Why would you say that? You cursed us." And then everybody it kind of got a little weird in there. Clearly we were the outsiders, and I was not that comfortable because it started to get a little rough, if you will. I've never been afraid of a scrap, but you're in the military in a foreign country and uh, kind of an unknown, and you're the minority in many ways. It's a not so good feeling. James Lamb says, "Go Gators." I guess not, James. Uh, you guys finally beat us last year. Gosh, you have some pride again. You could beat Kentucky in football. Don't forget golf. I'd rather watch golf than soccer or baseball, honestly. Uh, doesn't make golf exciting, but if I had to pick one of the three, that's what I'd pick. Golf, at least you can see like crazy things, like a hole in one, or crazy shots and stuff, and guys do kind of incredible things pretty routinely. In soccer, it's 90 minutes of marathon running and like 3 minutes of actual action. Most of the time, the ball is just getting punted back and forth, and guys are just running for no reason, like they're on a cross country team. It's like cross country with a ball. I don't understand it. They should make if they made the field like half as big, man, would that be more exciting? Like cram them into a small space. 5 down on ES for A. Potentially. Let's see. Honestly, I haven't looked at the count here. You could go 1, 2. I'd say I still want another wave down, so I'd call this 3 of 3, 4 of 3, 5 of 3. I'd still want to see like that. That would be a better 5 down in my opinion. Um, could you kind of consider this? No. I still think it needs one more down maybe, but in any case, it's a start. At this point, you can look for maybe a back test of VWAP and then down. They may give us the direct route right into the pre-market low here. QQQ breaking yesterday's highs. I don't think it is. I think it's down right now, right? I mean, not down, but yeah. I mean, everything broke yesterday's highs. It was a gap up day, but currently everything is weak. Not weak. Everything's moving down. It's not weak yet. But weakening. RTY down under 15 now, so it's weakening. Starting to see some weakening across the board here. We needed RTY to get on board. Looks like it's starting to. We're down at 2300. It's going to be a critical spot. RTY here is down at this support. So you have support on RTY right here. They're getting close to that zone. So this will be a critical spot. And then right below that at 2300 flat, you're going to have more support. So this zone right here will be important for RTY. How about soccer with wild bulls on the field? Now we're talking. See, now if you combined the running of the bulls with soccer, now we're talking about a game I could watch. That's something I could get in on. I feel like that's just kind of a Roman thing, though, putting lions in the pit with people. That's indoor soccer. Yeah, I get it. Indoor soccer contains small field. I actually played indoor soccer for a couple seasons as a goalie on a little rec team. I'm terrible at soccer, but I was okay at goalie because I have good hand-eye coordination. I understand angles. Uh, I wasn't great by any stretch, but I was good enough. I didn't have to defend a lot. I was on a pretty good team. Well, I should say we played a lot of bad teams. I don't think we were very good, but we played a lot of bad teams. Champions League or Premier League are far better games to watch. Maybe. You're not going to convince me, JR, to start tuning into soccer. And I'm not mad that you like soccer. Everybody's allowed to like what they want. It's just not for me. So a bigger breakdown makes sense in the sense that we talked at the beginning of this. Can you see that? My gosh, I have so many things on my chart. I need to clean this up. We talked about, it's just when you're zoomed out so far, but still it's. This 648, I'm sorry, 6482, 6500 area was the target I had for the fibs for this wave 3, and then a turn down. So far we're seeing that. As I said, we need to break down below 64, 67 or so. That's going to be the hourly 21 as well as the back test of this breakout. If they break down below that, then we're very likely headed into the 6380, 6360 area down here in the wave 1 territory. But this is what we talked about at the beginning and why fibs are so important. We would expect the market to turn down here, and it did. Now, has it followed through? No, but we knew resistance would be here. We suspected resistance would be here. I can't say we know anything about the market. No one knows anything. We suspected this to be a resistance area based on fibs and how they work, and they turned down off of that area. On the NASDAQ, we talked about the 1618, 24048 being, and to 24138 being our target area for this to turn down. We got to 24068 and turned down, so right at our lower end target, and turned down. This is why this stuff's so important, to give you an idea of where to look for the turns. Now what we look for is a bigger setup. So we would look for something like this, and then start to turn down. And then you can get short with this being your stop. And you're looking for, you know, potentially a very big pullback down here into the 23.3 zone. Or even further if they break down. So the risk reward becomes really good, your setup becomes really good, and then you have something to trade off of. We don't just trade 1618 and say get short right here because we don't know that it's going to turn down there, we just think it should. So that's something to keep in mind here. NASDAQ did show a little bit of weakness in the sell cycle there. It almost flashed a buy. Well, it did flash a buy on the NASDAQ, but the ES did not. So let's see if we get a buy signal. I got ES at 64.74, 64 to 64.67, and ultimately 64.64 is good turnaround spots. Yeah, it's possible that, you know, the gap close and pre-market low are very likely to get tagged. Whether they hold or not is to be determined. But those are areas I would expect the market to come down and hit most of the time after failing that breakout. NASDAQ is showing some that it's ready for a buy signal. We're waiting on ES to get on board. ES and spot. I'm still sitting on 644. Maybe we can get a little retrace back to the 21 for a small win, and if the bulls are going to trend and take it back higher, then a big win. But we got to get a buy signal first. I prefer it come lower, honestly, down around the gap close and pre-market low area. That would be where I'd like to see it happen. But we'll take it wherever it does happen. Dow Jones transports turned red, Nvidia's red, SMH has given some up but still green. RTY down under 15. It was up over 20 before. We'll see if we get a bounce here or some continuation to the downside. But ADD down to 1,000, so it's starting to give it up. Gold has turned red, so there's weakness coming in. We just need to see more of it and more acceleration. If they can do that, we'll see if support can break and momentum can pick up. Right now, there's no momentum. Like, yes, it's moving down and the trend is down for the short term, like the last hour or so, but it's not like a screaming move down. It's very controlled. So until or unless we start to see some momentum pick up, it's likely to get bought. NASDAQ is flattened out. So if we go over to the NASDAQ, you'll see that it's not giving up any more lows. That's why it's starting to consolidate and try to build a buy signal here. So it's either going to flag, right? Consolidate, flag, and break, or it's going to create some structure in a bottom here and squeeze. Let's see if they can squeeze a buy in here. There goes NASDAQ. Let's see if ES can get on board. First step is they got to get through the red line there. That's the 8. That is the momentum indicator in the sense that momentum is down. Not strongly, they're still right on the line, but momentum is down. They got to get back above that. That starts to flip momentum a little bit. Then the 21 is a huge level. And then, of course, VWAP after that. don't know what's going on with my rooster today. He's sleeping. He must have forgot his alarm clock or something. He's usually crowing my head off. Now NQ is turning red and ES is green. I can't get on the same page today. NQ just flagged and broke it down. Or trying to. It's at the low now. Trying to break this low. NQ pre-market low just below at 23,921. That will be an interesting spot if we can get a bounce signal there off the NQ pre-market low. We'd still expect ES to go down and tag its pre-market low. NQ now red, by the way. I guess it was red earlier, but Q's still slightly green. They closed the gap. Oh well. Okay, so the NQ, or the QQQ already hit its pre-market low, failed its breakout, pre-market high, broke down, pre-market low. These are the types of things that you look for in those breakdown situations, is a tag of the pre-market low. They still haven't got there on ES, so I would suspect a little more downside coming, since ES has got about a point of downside still to get to close the gap. Or the SPY, I should say, 1 point. SMH has turned red. Interesting day. Anything else turning red down here? Oh yeah, Meta, Microsoft, Netflix all turned red. Isn't Netflix up like 8? Oh yeah, yeah. Netflix had quite the drop. Google's turned red. So. Trying for this gap close. Patiently waiting for the key levels to hit. Boringest part of trading. Rooster must have hit a stop loss and called it a day. Yeah. still looking for 642. I was looking for 642.65, 642.85. So yesterday's close and yesterday's pre-market and the pre-market low. $642.65, 642.60 would be the targets. So the next targets down. RQY is hanging in there. It doesn't want to give this up. It's Rick Astley. Never gonna give it up. Let it go down. How's the 8 been working? Pretty good for momentum. So we use the 21 for trend day parameters. If you go watch the video in my Elliott Wave for Beginners course, the 20, I give a whole 10-minute video on how to use the 21 properly. But the 8-day is more the momentum. So when it doesn't come back to the 21, it starts by coming back to the 8, right? So you'll see it comes here, back to the 8, back to the 8, and so on. So as long as it stays below the 8, momentum is strongly down. Once it gets above the 8, then the 21 is the backstop. And if it gets past the 21, then we have a potential trend change at that point. But so far, I kind of enjoy it. I think it's... I've always used the 21. I was taught on the 21, and then I found somebody that uses the 21 but uses the 8 as its kind of momentum indicator, and it's been very effective so far. Seems like it. You kind of expect NQ to consolidate a little around its pre-market low, but it's pushing through. So you gotta be careful here that the NQ is trending down. That can turn into a quick trend day down, and then acceleration, especially if ES can't hold its pre-market low. That's going to be the next major factor for both markets. If ES can close the gap and break down and turn red and it doesn't hold the pre-market low, then this can start to cascade very quickly. 640 would be the next number, and then after that you're looking at 638 containing the move. So potential for another 5 points of downside on the SPY here, if, and it's a big if they can get through the pre-market low. If you look, I mean, there's a lot of support right here on the 5-minute chart, where they kind of just consolidated this whole area. So they got to get through that, but if they get through that, then we can drop 2 points pretty quickly and 5 points overall. However, keep in mind the RTY is still standing strong. It's back above 15 at 17 now. Transports are still green, the banks are still green. So yes, the ES and the NQ are slipping, but it might be contained here by the ES's SPY's pre-market low. If you're a bull and you're looking for this market to continue, you're going to want to see a reaction off of this area, and a pretty stout one. I mean, you're not going to want to see it kind of sit here and do this. You're going to want to, generally, you want to see this be kind of move off of that low area to signify that they're trying to buy that up. Hopefully you guys have etched this into your mind now. When the market fails to break out, so it gets above the pre-market high or near or at the pre-market high and fails, it's very likely coming down to the pre-market low. And when the market fails to break it down, bounces back above the 21 off the pre-market low, it's very likely to go back to the pre-market high. Don't forget, guys, if you want the key levels you see on my screen, the call resistance, the put and support, you got the mentor Q links in the description. You get 20% off of mentor Q with that link. I do get a kickback for that, but you get a discount, so we both win, and you get a great product. It's a great product. What I use it for is just scratching the surface of what it does. They have so many things in there that are incredible. This is just one small little feature of it that I use, but they give really excellent charts for all stocks, so you can get the call resistance on NVIDIA or anything else and understand where all those levels are. But they run all kinds of trading simulators and all these different things that are pretty cool. It's a pretty cool software. Slow moving day today. Lazy river stuff. Like I said, so far a pretty controlled sell. I have moved my strike down to 643 FYI. So if we do get a buy here, I'll be at 643 on my strike. Okay, we are at 121. Stop is going to be 643.10. We are long. To be honest, I don't love being long from this spot. It seems like a little bit of a trap to me, but I trust the indicator, and if it doesn't work out, that's okay. $145 would be our first take here. Got to get through the 8, that's the red line. If they can get through that, then they can go up to 644, and that should get us close to getting paid. So we'll see where we're at there. All right. All right, close half for 145. Let's set our stops to 120. There's a winner. See if they can get through the 21 here. Remember, RTY was our barometer, and RTY is back near its highs again at 22. So RTY never really gave up much, and um, while we still would expect them to tag the pre-market low here, we could see a quick flush and reversal. They don't have to. They got pretty close. They came down into the area of it, and now if they can reverse and continue, then we get to squeeze, and that would be great. It's a controlled sell on the way down. That doesn't mean the selling is over, but this part of the selling was controlled. All right, we got back to the 21. This will kind of be the key zone here to find out if they're going to be for real or if this is just kind of dead catish. Let's see if the bulls can flex here. They'll want to close above the 8 here on this last 30 seconds of this bar, and as close to the 21 as possible, but definitely above the 8. If they get back below the 8, then it's probably a dead cat. We should look for continuation down. All right, there's a close above the 8. Now they got to get through the 21, assuming they can do that. VWAP is next at 644.60 or so. But they got to get through the 21 first. You also see that VWAP didn't come down with price, telling you that a lot of buying occurred up here. The volume weighted average price, the volume is higher up here at these prices. Otherwise, it would have been turning down sharply. So those buyers want the price back above VWAP, so they're going to continue to try to push price. You move your stop to break even now. I mean, it's at 120 and break even's 121, so it's already there, I guess. What is the red line? Which red line? This one here, the moving average. It's the if that's the one you're talking about, it's the 8 moving average. So on this one, it'd be 8 5-minute bars, but it's a momentum indicator in the sense that the 21 is our true kind of trend indicator, but momentum is indicated by the 8. So we can still be on trend if we hold the 21, but momentum is slowing because they got above the 8, and then they come back down, and we'll see what happens. But the 8, you'll see they come up and test it here, they come up and test it here, and now they got above it, and they come into the backstop of the 21, and we'll see if they're able to get through that or not. Yes, it's an SMA. Oh no, I'm sorry, an EMA. It's an EMA. Let me just double check. I'm pretty sure. Yeah, EMA. My bad. So when the 8 is below the 21, trend and momentum are down, and when price is below the 8, momentum is down. When the 8 is above the 21, trend and momentum should be up, and above that 8 would be momentum is up. Okay, we stopped at 120 there. No follow through from the bulls here. I thought that might be the case, but we did get a small winner out of it, so we'll take it. We get stopped at 121, or I'm sorry, 120, 25, so 132, 133 average exit. And just so you guys know, the first half number of the day gets rounded up, the second half number of the day gets rounded down, so I don't always take the higher number. And for instance, the average between the two was 12.5 cents. I made it 13 cents. The next time that would be 12 cents. I do not have a buy signal, then you have settings wrong on your chart bill. Make sure you have real-time data on the ES and the NQ. Make sure your settings are right, that you have the ES and the NQ and the SPY all in sync. Your settings in your indicator should look like this. ES, NQ 2. And over here on the side where I have my things, if you have a little yellow D by the ES or the NQ, that means you have delayed data. And so you're not going to get a buy signal. You're not going to get any of the signals on time. So you got to make sure you have real-time data. And on top of that, you need to make sure you have your pre-market and post-market trading on. So the yellow and the blue on my screen is that. If you don't have those things set up properly, you're not going to see the signal. You should also, if you leave, like I leave my computer set on the screen all night. So in the morning when I get up, I refresh it just to make sure that the programming logic for all of my indicators reloads, because TradingView freezes sometimes where it'll still give you the candlesticks, but it won't give you the what's supposed to be happening under the hood with the indicators. So those are all things you want to check. Oh, it just showed up, then you definitely have delayed data. You need to get real-time data for the ES and the NQ. So the easiest way to check that is if you go to ES1, your candle should be on 8:30 right now, or whatever time zone you're in, it should be on the 30. And I'm guessing it's on the 20 because you have delayed data. Thanks for today's session. No problem, Rob. Thanks for showing up. Bill, it's a setting issue. You just I can tell by how you're saying it's showing up that it's definitely a setting issue. You need to get your settings correct. I would very much go back and watch the videos at investwithjacob.com TV indicator and go down and watch setting up TradingView and setting up the indicator, and make sure that you have all of the things I list in there. Also make sure that you have the CME, CBOX, COMEX, and NYMEX EME included add-on for $7. If you don't have that, you're not going to get the correct signals. It's delayed. There'll be an orange D beside the ticker. Yeah, exactly. So over here on this side, on the ticker, where it says ES1, there'll be a little D next to it that says it means it's delayed. Just to be clear, a standard TradingView account does not come with real-time data. You must add it on, and it's $7 per month. Just enough to stop us out. Yeah, that's how it goes sometimes. You get a pullback and they stop you out, and then the market continues. You have to play the risk-reward strategy. If you don't, and you say, oh, it's gonna hold and go higher here, and it doesn't, then you get blitzed and you turn a winning trade into a losing trade. Again, you're gonna miss some moves. We missed this move because the ES and NQ weren't in sync. That happens sometimes, not often. It's not often. We missed this one because they stab us down to the bottom, and stop us out. That's going to happen sometimes. All of those things are part of trading, and they're annoying. But if it was easy, again, we all know the answer to that question. We'd all be billionaires. And we still don't know that this is going to break out to the upside. It still hasn't gotten through the 21. And we still haven't hit the pre-market low, which is my expectation. So we'll see what they're able to do here. All right, guys, I think I'm going to go ahead and call it for the live stream today. Reason being, we just had the trade. We stopped out of it. We are now in the middle of cycles, so it's going to be a while before we get another trade unless you get a severe spike down. So rather than sit here and kind of watch the market do nothing and try to fill the air with stories and silence, we're going to go ahead and wrap it up for the day, and we'll be back next Wednesday to do this again. Guys, if you're not in the rooms, I'd encourage you to get in there, and you get 30% off of the first month of the indicator with that coupon code you see on the screen. That'll go away here in about 10 minutes after I give the people who bought it access. And if you want the yearly, you can get the free Elliott Wave courses as well. And we'll see. Again, my expectation, guys, is they hit at least the pre-market low, but not necessarily to melt down because the RTY is too strong. So a spike down and push up to end the day is my most likely path, something like this. So if you do see a buy signal off of this area, I would consider that a very good area to buy. Otherwise, if they can't hold that area, maybe the RTY gives it up, who knows. But the most likely path as of right now, the way the market is sitting and looking, is spike into this area and then grind higher. Whether, maybe not to all-time highs, but grind back up off of it, where they don't necessarily fully melt down. All right? Any questions on anything before I go? I'll give you guys about 2 minutes for questions. Maybe less, maybe 1 minute for questions. You need to see the 21 hit to enter a swing short. No, not necessarily. I would be looking for a corrective bounce more than anything, and then a turn down off of that, then I would enter a swing short. Thank you, Chin. Appreciate you being here. Thank you, Hans. Appreciate you being here. Thanks, Mo. Appreciate you guys being here. Glad you had a great day, Mo. All right. Have a wonderful day, guys. Have a wonderful week. If you're just tuned in on Wednesdays, I'll talk to you next week. If you're in the rooms, we'll be there for the rest of the day and do our video here in about an hour and a half. Thanks, everybody.